Hey guys. Hello. Hello. Hey guys, anyone here? All right, we are live. Hey guys, anyone here? All right, we are live. Starting in 7 minutes. Hey guys, anyone here? All right, we are live. Starting in 7 minutes. Hey guys, all right. Let me just check how many people are here. And then we'll kick it off. Hey guys. And then we'll kick it off. There's kind of a delay with my chat here. So I'm going to have to switch off the chat. I'll answer any questions later or at the end, actually. With my chat here. All right. So, hi everyone. I'm Scott. As you all know, what am I doing here? I'm doing a failed breakout system today. Let me share my screen and let's get cracking. Okay. And we're presenting. All right, so this should be good. Let me just check that it's good. The actual URL and so this should be good. Let me just check that it's good. And it's good. All right. So today we're doing the failed breakout intraday system for FX futures and stock indexes. And let me turn the pointer on. Okay. Okay, so what you're going to learn today is that we have two types of systems. We have pure mechanical systems that tell you exactly what to do, and we have discretionary approaches, which work very well for a short period of time, but eventually they tend to give you the freedom to blow up your account. So if what we're considering is, you know, a white side approach is just follow the rules, be like a trading robot, and a dark side approach is do whatever the hell you want, just find a chart you like. What we're trying to do with this system is walk the middle path. So the advantages of discretionary system trading, my old mentor, Van Tharp, thought that discretionary system traders make the best traders, requires more skill, but they make more money. So a fixed set of rules has many advantages, but a fixed rule set can never, ever be as good as an expert trader paying close attention. I think we all know that's true, and that's part of the reason why many of us haven't gone into system trading is because deep down we kind of believe that I can still beat the system. So discretionary systems have far greater earning potential than mechanical systems. You can with a proper system execution in 100 to 200% per annum consistently, but nothing for nothing in this world. Discretionary systems require more skill. So as soon as you state your rules so precisely that a computer can execute the trades, you open yourself up to what Van calls errors of omission. So good or outstanding trades that your automated system cannot take because of its precision. And those missed opportunities aren't mistakes, but they limit the potential results. So the results of a mechanical system always look rather weak compared to the results of a trader who used that same system and was allowed some discretion to take all those other trades that were just nearly but didn't quite fit. And so what will we achieve today? You're going to understand at a deep and not superficial level a very high performing system. You're going to understand the process of turning this knowledge into a profitable trading business. You're going to understand how to monitor your own performance and how to know when you're ready to trade this bad boy for real money. And the thing I want to point out is that until you see a 0.5 expectancy system, because most systems are between 0.1 and 0.2 expectancy, you probably don't even understand how to start building a high-performance system. So today's goal is we're going to take you from I know the rules of the system to I am an expert in the system. So you cannot exercise discretion without a deep understanding of the system. You must understand the psychology behind the system and not just the rules in order to know when to bend the rules and when to actually break them. So why is discretionary trading so hard? Because we evolved to see patterns. Pattern matching is part of our DNA. And if you imagine that you are, 100,000 years ago, you're starving and you're tired and you're getting tired because you're starving to death. There's two cavemen guys sitting next to each other. One says, I'm just going to take a rest now. I'm really tired. And the other guy says, no, don't do that. Let's try this. Let's go over the next hill. Let's see if we can cut down that branch and make us. and make a sharp stick. And, you know, the surviving guy is going to be the guy who tried things, who saw patterns, who took risks. So pattern matching and risk taking is we bred for it. We bred for it like a racehorse. So we see patterns where none exist. And if you've ever had the experience when you sit down to look at markets, and just the second you sit down, you notice setups that are like, oh man, I have to get into that right now. That's perfect. So that is your brain lying to you. It just sees patterns where none existed. Or I think everyone's had the experience where you fund your first stock or FX account, and the day that you funded it, you immediately find setups that you have to take. So our brains just lie to us all the time. And part of the challenge is we need to recognize when that's happening. So the solution is to put some structure around what we're allowed to do and what we're not allowed to do. So to give ourselves some limited freedom of choice while still boxing ourselves in with rules that stop us from behaving like idiots. So when we take trades that are very similar in all respects, the outcome is going to be similar. So what we're trying to do is not take the perfect trade. We're going to try and take trades that behave very similarly, so we can manage the exits of our trades similarly. So that's going to result in smaller drawdowns, and it's going to result in an easier emotional time. So what is the failed breakout system? It's an extremely high performing system. It's an SQN 100 of 3.8, which rates as excellent to holy grail. It's a 65% win rate. For those who care about that, I don't particularly, but the expectancy is 0.5, and that's not a typo. That is a very high expectancy system. Now, there is both mechanical and discretionary entries, extremely low drawdowns. Typically 9 out of 10 weeks will in positive equity, and you typically have 2 to 5 opportunities per day. So why does it perform so well? It uses multiple time frame confirmation, and that's the big thing. It turns average entries into very high probability entries by using multiple time frame confirmation. That's basically it. And it enters at the lowest volatility point, so odds favor volatility expansion yet. When we see candles that are too small, we know that the next candles are probably going to start getting bigger. And that's the time that we want to get in. So we have many opportunities, so we can cherry pick the very best ones. And it relies on human nature. So short-term traders are going to be trapped against the trend, and we position ourselves to profit from their stops being triggered. So if you've ever been on the other end of a stop run and found yourself thinking, oh, the market makers ran my stops, you can actually trade on the side of that phenomenon, which is what we're doing here. So these were my own real money results for the first 5 months that I traded the system back in the day. I think I could do much better than this now, but you can see they're not bad. So my results got even better. These were the results while I was still learning. My performance improved over time as my skill improved, which is something that you're going to see. And today my skill has improved from 2012-13, and I'm pretty confident my results would be much better. So I've got a marketing guy who tells me how to do this stuff, hold webinars and all this sort of stuff. And he told me I need to give you an ethical bribe. And if you stick around, I'm going to give you a PDF document with the exact entry setup rules for the system you're going to see today. So you have to stay to the end to get that. And you'll get a collection of screenshots of winning and losing trades. And you can get the spreadsheet I use for my own trading as a template. So I know I speak really quickly. There's a lot to get through. I don't go in for like that slow delivery webinar fluff, not giving you any details. I'm just going to verbally vomit every bit of information I have about this to you. I don't want to hold anything back. I'm not doing some kind of bait and switch bullshit. So please turn off your mobile phones, shut down your Facebook or Skype or anything distracting. It's complicated stuff. You'll get this PDF at the end, so you don't need to take notes, but really try and get some comprehension of what we're doing. So who is me? Who am I? I'm a trader. I'm not a trading educator. I really hate those guys. And most of you know me from the price action masterclass or from my emails or maybe from the system building masterclass. I'm a fully systematic trader, primarily in the futures markets, but also in stock, FX, and crypto. I take about 500 trades in a normal year across, it's now 4 core systems. Right, on 3. Most traders specialize in one narrow area of system design, but I've been exposed to many different system types over the years through a couple of very high-level mentors. And I understand both discretionary, mechanical, automated, trend following, mean reversion, and all different types of systems. I understand at a very high level. And I've worked with my core mentors were Ivan Krastens, then Linda Rashke, then Al Brooks, then Van Tharp, who was probably the biggest influence on me, and then Ed Sikota, Ken Long, Gabriel Grammatidis, Michael from Even Speculator, and hedge fund trader called Laurent Bernou. And there's plenty more. And I've done some stuff right, and I've done some stuff really wrong. I lost a lot of money at the start. But the stuff I discovered the hard way, you get to cheat and discover the easy way. So there's a fundamental misconception that most of us have in trading. We start by learning some technical analysis. We find an indicator that we like, or a chart pattern we like, or a trend line we like, and then we place a trade. And it seems easy before you do it. It seems easy in retrospect. Like you look at the old charts, it's like, oh yeah, there's the trend line breaker, short, easy. But this sort of freewheeling, we call it shoot from the hip style trading, is the hardest type of trading there is. System trading is far easier. So why do we do the hardest thing on our first day before the easier way? So the three secrets. Number one, system trading isn't just more profitable, it is far easier. Number two, getting better and better at technical analysis is fun, but it's not going to make you consistently profitable. It's not going to help you that much at all. And number three is that most trading psychology problems completely disappear when you trade with a system. So, this was me before I was a system trader. I was constantly worried about what the stock market's going to do tomorrow. I'd get up in the middle of the night to take a piss, and I'd check the markets, and I couldn't get back to sleep, and I'd be stressed and worried about it, and I'd be doing other things and checking my phone while I was at the supermarket. I spent a lot of time on Seeking Alpha, bullshit bearish news sites, and I was secretly hoping for market crashes like a muppet. And after, I don't really give a fuck what the stock market's going to do. It's going to be up, it's going to be down, it's going to be unchanged. I don't care. My job is to follow my trading rules and not to worry about things I can't control. You have to know your numbers, and you have to understand that your system is going to pull you out of drawdown eventually. So my experience is that stressful feedback loops happen when you worry about things you can't change. So if I'm worrying about what the stock market's going to do tomorrow, I don't have any kind of control over that. And me Googling stuff or checking it 100 times a day, it's just me really trying to regain some control, which is an illusion. There is no control. You haven't got no fucking control at all over any fucking thing that's going on in this life. The shit that's happening is just going to happen. If the stock market's going to crash, it's going to crash. If it's going to go up, it's going to go up. There's nothing I can do to affect that. So we spend a lot of time thinking about trading psychology and worrying about our bad trading psychology. But most trading psychology problems, you can fix them with just better trading procedure. Just do your job better. If you worry, my experience is people who worry too much about trading psychology are shit traders. Good traders, trading psychology doesn't enter into it more than a very small amount. So why intraday FX trading? So the number one thing is this market is very suitable for small accounts. And this system was actually the system that I started compounding my small, it was like $18,000 account, into something which is actually meaningful today. The FX markets are deep and liquid. There's very little slippage. You could trade 30 million bucks worth of Euro USD at the market in NYSE session. Your position sizing can be exact or near exact, which you can't do with futures. It trades 24 hours a day, 6 days a week. And an advantage that I believe that is huge that most people don't even acknowledge is that with FX, it's like driving a Formula One car. It's like walking on a tightrope between two buildings. You cannot trade incorrectly even once. You can't just turn a trade into investment. You can't give it one more day. You can't just see how it works out. If you do that even once, you're going to fuck yourself. Like, you're just going to wreck yourself. It's just not possible to do anything so stupid. So, to me, the idea that you have to trade perfectly or you're going to blow up is a huge advantage. So the failed breakout system, it's a simplified version of a system that was invented by Gabriel Grammatidis, who's an old mentor, called the busted breakout system. And it was developed from Van Tharp's super trader program, and I simplified it. I'm a great believer in that simplicity is elegance, and I took out a bunch of stuff which, when I tested it, was not adding to the edge, was simply adding to complexity, which was causing mistakes, which was, for instance, there was pivot points, there was round numbers, there was a whole pile of stuff which together, none of that shit made any difference at all when pivot points aren't real. So pivot points are just bullshit. So I just took it. I basically took all the bullshit out and made it simpler. So Van is a mentor of mine who teaches he specializes in discretionary system design, and he teaches this $60,000 super trader course, which built this system, and I added mechanical entries as the re-entries, and I also improved the exit methodology quite a bit. So why am I giving this away for free to you today? Some people don't think they can come up with an idea for an entry setup, and here's an easy fix. You can just use mine. I don't care. Not going to affect me. So I've gotten huge benefits from sharing my trading methods and results, and by sharing what I know, really great traders have wanted to collaborate with me, and that never happened with me before I started actually sharing what I want to know. Like this idea of, oh, it's my secret proprietary special secret sauce, doesn't take you that far in life. You know, every good thing that's happened to me has happened by helping another human being, you know, and that's working for me, so I tend to do more of it. So the caliber of people I collaborate with these days, they're not home guys in their pajamas like me. I'm collaborating with hedge fund and investment bank traders, HFT programmers, economists, you know, market makers, like really high level guys, and they're sharing their stuff and I'm sharing my stuff. And this all came from me sharing my knowledge and not hoarding my knowledge. So I also personally hate the trading educator industry. I think it's 99% scams, and I love giving away better stuff than they charge for. This seminar today would absolutely cost you a couple of grand from almost any trading educator in the industry. So, you know, if I can give that away for free and fuck those guys up a little bit, that just really rings my bell, you know. And I personally wasted years on baseless theories and dead ends. I'm looking at you, Elliot Wave, fuck you. I would like to save others the suffering that I experienced, because it's really painful to go down dead ends in trading. And it doesn't cost me anything to share. And the edges that I'm going to share with you today, these are strong edges. These aren't going to be arbitraged away. You know, if I was going to wreck my system, I probably wouldn't share it, but it's not wrecking anything. So what market behavior are we trying to capture here? So if we look at a trend, what we're not trying to capture, if you imagine it as a fish, not the head, not the tail, just the fillet. So if you look at the first part of this trend, it looks easy in retrospect, but it could have been a trading range here. It's really not, it's not clear yet. This is the best part of the trend to trade. You know, it's nice and orderly, like a steady march down. The pullback is sold, perfect, beauty. But this last part of the trend, see how the swings get bigger, gets messy. Maybe the trend is over there. Oh, it makes one more. Oh, we get short here, and then you're fucked. You know, so this last part of the trend, your edge goes down. The first part of the trend, your edge is down. This middle trend, this is butter. This is gravy. So what we're trying to do is increase our edge by just trading the nice bit. So by being very specific, we isolate the market phase that we want. We're looking for several different market behaviors to happen at once. We're looking for a strong trend on multiple time frames. The daily trend is the most important. We're looking for a pullback to support on both the 60-minute and the 240-minute chart. Now, don't worry about remembering this. We're going to go through them all one at a time. It's all going to become clear. We're looking at volatility being very low, and we're trading against trapped traders to kick off the market. Now, look at that again. We're looking for 1, 2, 3, 4, 5 simultaneous things. So by having 5 simultaneous things, which we're going to look at now, you're going to understand it, we get super specific. And when things get super specific, they tend to become near identical. Okay, first, before we get started, let's look at how to set up your charts. I want exponential moving averages, 8, 21, and 50, and these don't mean anything. They were just the ones that Gabriel used, so I kept using them because I was trading another system of his, and I wanted to make my life easy. So as an optional, you can put an ATR. I use the default parameters of 14 on a 5-minute, but you don't need to do that. So what I mean is we have the red line is a 50, the purple line is a 21, and the blue line is an 8 EMA. And we want a 5-minute, a 15-minute, a 60-minute, a 240-minute, a daily, and a weekly. So what we have is a rules-based method of saying that's a trend. So blue line below the purple line, below the red line is trending. So let me say that again. This is critical. This is one you have to get. And I'm just going to go and check the chat to make sure you've got this. Okay. Can you just let me know if we really understand this? The blue line below the purple line below the red line is a bearish trend, and vice versa for a bullish trend. To make sure you've got this. Okay. Can you just let me know if we really understand this? The blue line below the purple line below the red line is a bearish trend, and vice versa for a bullish trend. To make sure. Okay, so I know that moving averages are lagging, but remember, because we don't want the head or the tail, that lag actually works in our favor. So the crossover happens here, and we really don't start trading until about here, which is fine. That actually works out in our favor. So we have a 5 minute to take our entries on. We have a 15 minute, we have a 240 minute, we have a 60 minute, we have a daily and a weekly. And we need at least 3 out of 5 time frames to be trending. So here you can see this one is a trend. This one is a trend. This one has just started trending again. And this one is a trend. So we need at least 3, and here we've got 5. So we have a rules-based method of saying this is a market that I'm going to trade. So this is just a quick scan to make a short list. So don't get too worried about details. You just make a short list and visit it later. So what you do is you go through every currency pair that or futures pair that or futures instrument that you're trading, and just go through them all one at a time. AUD USD, AUD JPY, AUD CHF, AUD CAD, and you just look at them for 5 seconds each, and just make a list of the ones that fit the rules. And so at the end, you're going to get 5 or 6 every day that fit the rules, and then you're going to look at the best ones. And then you're going to start to think about entries in just those best pairs only. So don't get too worried about the details. Just make a short list and revisit it later. You can bend the rules a little at the start of the trend only because the moving averages lag. You have to use common sense here, right? It's a system. It's not a suicide pact. But it should be a situation where the moving averages are obviously going to come into alignment and the price action is supportive. And the only reason they're not in alignment is because of the inherent lag. So this is the process. You do it once a day, and you only do it once a day. And if you don't have any setups, you just take the day off. So number 1, you scan for a short list of trending markets. Number 2, we revisit the short list, and then we isolate the best opportunities. Number 3, we decide if we have an ideal setup, not an okay setup, not a fix the rules setup. It's got to be fucking good. It's got to be compelling. If we don't have an ideal setup, we're going to skip. And then finally, once we've got the ideal setups isolated, which is probably only going to be 2 or 3 a day, sometimes none a day, we're going to look for entries on the 5 minute time frame, which we'll get to. Okay, so what is an ideal setup? And the daily chart is the most important. So what we're looking for, in truth, is a chart with a greater than 70% chance of continuation in the next day. This means that you look at the price action like we teach in the price action masterclass and use the moving averages as a visual aid. So let's examine this in detail, bar by bar. So the ideal setup is below the 8 EMA, but not too far to prompt mean reversion or profit taking. Now, can anyone tell me what is the best bar to enter on out of all of this? Okay, can anyone guess which is the best bar to start stalking entries? So what we're looking for is the very best entries are when the market is below the 8 EMA, but not so far below that it's going to prompt some mean reversion taking place. This is a mean reversion phase, and you can see it gets choppy. You can see here it gets very choppy. So this bar is good, but it's not the best one. The best bar to start stalking is after this one. After this one, you can reasonably say it's almost certain to keep going down, or this one is good too. So the three best bars would be at the end of this one, the nice bearish engulfing, like someone said, at the end of this one, or at the end of this one. Like this bar is a nice bar to stalk entries on. Okay, so early in the trend, we can be a little bit more flexible. So what we see here is reading the price action, we have a bar with an expanded range. It's open near the highs, closed near the lows. What that tells us is that the sellers are in control. Similar day to this one right here. Okay, so this one is not perfect because it's a little bit too far from the moving averages, but it's not bad because of the strength of the trend and because it's closed below the previous spike low. And I would take this if the other timeframes were perfect. I'd definitely take this one. So one thing I want to point out is that once mean reversion has started with the hammer candle here, mean reversion is likely to continue. So this lessens the odds. But after this next bar, mean reversion has not taken place. So it's likely that we're going to get no mean reversion, or the mean reversion was just a single day mean reversion. And now with the bulls having exhausted themselves, the bears should take over. So this would be an ideal situation to stalk entries. So any sort of, what we're looking for is a situation where it's almost certain to keep going down. This was actually wrong, because even though the odds were that it kept going down, sometimes the market just does the opposite thing of what it's supposed to. And once the market starts doing the opposite thing of what it's supposed to, there's nearly always something else in play. So if we think the market should go down and instead it went up, this is a good time to stand aside for a few days, because once the market starts to get choppy, it tends to stay choppy for at least a couple of days. So as a general rule, you ought to be very suspicious of any marginal days until you're absolutely certain it's back on. So the way I think about this is that if you imagine a rock thrown into a lake, it just needs time to settle. So this was that bar there. So after the first bull spike, you can see that it's just chopped around for like, this would be an incredibly frustrating time to be in this market. This would be just absolute crud. It's going to freak you out. It's going to be, oh, it's still good. Oh, maybe it's good. Oh, fuck. Oh, good. Oh, it's just going to drive you crazy. And it eventually did resolve to the downside, but oh. So you can see eventually it resolved to the downside, but really this month of bullshit, we just don't want any part of, right? So this is the best bar. We have a strong and smooth trend. We are earlier rather than later in the trend is always better. We have a close below the 8 EMA, but not too far away. We have one side controlling the whole day. Open at the highs, close at the lows, or open at the lows, close at the highs. We can bend the rules a little for the strongest trend, but that's not necessary here. So let's recap. We want a daily chart with an overwhelming probability of continuation, like overwhelming. So the 240-minute chart is a little different. We use the 8 EMA as a visual aid. And what we're looking for is, while the daily is a strong probability of going down, we want the 240 retraced to the point where it's almost touching or just touching. Like here, here, this one not as good. This is perfect. This one is great. So let's just stop a minute and make sure that everyone gets that. So we want the daily chart going down with a strong probability of keeping going down. At the same time as that, we want the 240-minute just almost almost at the 8 EMA or just touching it. Just okay, has everyone got that? Okay, everyone got that? Cool. All right. Okay, one thing I want to point out to you is it's not part of the system, but in a strong trend on multiple time frames on 240-minute charts, the crazy Ivan entries from the Setups Toolkit and the System Building Masterclass are extremely high probabilities. They're 70% setups in a strong trend. I built a whole system around this, which is the 4-hour mechanical system, which you can also look. It's on the YouTube channel. So you can see here that we've got retest variation, sell, shooting star in the direction of the trend. Anything that's just touching the ADMA, and you get a crazy Ivan set off that, money. So that's something to keep in mind. I personally do my re-entries this way. So Gabriel would have a failed trade and then re-enter with the same system. I will have a failed trade and then instead of re-entering on the same system, I will enter on a mechanical system with one of these crazy Ivan entries with a wider stop and a higher win rate. So how are we going to trade the mechanical entries? If you're going to be in front of the screen at the 4-hour rollover, then I use the Protect R methodology from the System Building Masterclass. Otherwise, if an acceptable substitute is to set either a 1R, 1.2R, or 1.5R limit exit, if you have a very wide range entry, a 1.25R limit exit is optimal. So you're going to use limit exits when you're going to be asleep for a rollover. And one thing I don't want you doing is staying up late or getting up early or interrupting your sleep or your life in any way, shape, or form for a trade. That's just not a sustainable thing to do, right? So retests after a deep retrace, like these. This is the retest variation sell, retest variation buy. These are some of the highest probability trades. You can take these on any time frame. You can take them on 15s, take them on 60s. You can take them anywhere. These are money. Absolute money. So we don't have time for a deep discussion of mechanical entries, and they're covered to death, in the System Building Masterclass, which I'm going to sell you at the end of the webinar. I'll give you a deal. Especially the mechanical retest entry. It's suitable for pure mechanical intraday trading. You can build your whole business around that one setup. And if I'm not feeling comfortable with the setup, if I'm a bit wishy-washy about it, I often take the mechanical setup because it's easier on the emotions, because there's less moving parts, less to think about, less to go wrong. And also, if I'm operating at the limit of my span of control, so if I'm following at 3 markets, I'm okay, but at the limit, at 4 markets, my performance degrades, just personally. I'll take mechanical entries since they're much easier. Okay, so we've got the daily chart, we've got the 4-hour chart. What should the 60-minute chart be doing? So ideally, the 60-minute chart should be between the blue line and the purple line, so between the 8 EMA and the 21 EMA. And one thing I want to point out is that we're not using these moving averages for prediction. These are just visual aids. So ideally, this should be very low volatility, which is small candles, and very tight range. And this is what Al Brooks, he calls barbed wire tape, because it just looks like barbed wire when you see it all zoomed in like this. It's all spiky and lots of doji bars, and it's the kind of tape that is a pain in the ass tape to trade, but we're getting in early, hoping that'll resolve in the direction of the trend. So the more like barbed wire it is, the longer this crap goes on, the more likely it is to resolve in the direction of the dominant trend. So lastly, let's look at the 15-minute chart. So this is the least critical chart. You could even take this off your screen if you really wanted. And what we're looking for is the 60-minute was between the blue and the purple. The 15-minute should be between the red and the purple, so between the 50 and the 21 EMA. And it should be a very tight, orderly pattern. This is perfect. You can see this is a very obvious, which now Why is this perfect? Because traders will put their stops here, they'll put their stops here, they'll put their stops here, there'll definitely be stops here. So as the market goes, this one is going to trigger those stops, going to bump it up a little, trigger those stops, trigger those stops, trigger those stops, trigger those stops. And if you've ever seen a market just bust out really hard, like it's doing nothing and then it's just like on fire, that's all these stops getting triggered. So we can get ourselves positioned ahead of that stop run. So the more sideways and tight the pattern, the better. So we're looking for a series of spots where stops are going to be clustered. So we're looking for a chain reaction. We're looking to be on the other side of that, oh, fuck, the market makers ran my stops situation. We're looking to trade with that instead of be traded on. So when the daily, when the 240, when the 1 hour are correct, we drop down to the 5-minute time frame to take an entry. But what is an ideal 5-minute chart? Good question. So the general principles are we're trying to enter in the low volatility phase, which means small cap. So why? Because we get better risk reward, tighter stop. So we can use the ATR indicator if we want. You could use standard deviation if you want. You can just eyeball it if you want. But, you know, ATR is pretty good. So we're looking to draw a horizontal support line, ideally on open closes, not necessarily on highs, in the most logical spot that we can. We're looking for a very tight sideways pattern, ideally, but we might bend the rules a little for a strong trend or a second entry in an established trend. And then we're looking for a false break of the trend line. So if we're looking for a long entry, we're looking for a fake out down, which is going to trap these idiot 5-minute traders. And when they're overwhelmed by the higher time frame traders, they're going to be forced to cover. So let's take a look at some examples of trades I took, some bad and some good. I mixed them up so we can build up our magic powers of discretion. So yeah, this is a trade in retrospect I probably wouldn't have taken. So it's a very high and tight, very nice pattern on the 15, which probably tipped me in favor of it, and a very nice sideways pattern. You can see we've drawn a horizontal line here, and we have a false break below, and we've recaptured it. So this is my first target, which is at 1.2R. I exit a quarter of the trade there. Here is my stop loss. Let's see what happened with this trade. I can't remember it. Okay, so it did actually work out. So what happened? It made that false break below. We entered here, took partial profits at 1.2R, and it messed around. This is very common, messing around, messing around, messing around, messing around. And then eventually it's taken off, and it reached a maximum favorable excursion of 4R, where I instituted a chandelier stop, and don't worry about the exits yet. And we exited the whole the rest of the trade for 3R. Okay, so let's look at this trade. The weekly is an uptrend. The 240-minute is an uptrend. The daily is not an uptrend. This is almost down to the 8 EMA, so this is okay, not 100% perfect, but pretty good. We have the 60-minute right in the price range, and we have a nice horizontal line here drawn on opens and closes, and a false break, and a false break below. Trade 69. How did this do? I don't know how it went. That was a good trade. So here we have AUD CAD. The daily is up. The weekly is up. 240 is up, and it's pulled back almost to the 8 EMA. The 60 is perfect. The 15 is perfect. It has these stops these stop places. We don't have an ideal horizontal line, but it's such a nice pattern. I would enter there anyway. That's a really nice trade. Okay. This one, we have early stage uptrend on the daily. We have a nice uptrend on the weekly. 240 in GBP JPY is a little too far away. And GBP JPY is between them. It's not quite ideal. It's a little bit overextended, but it's a very strong trend. And you can see on the 15-minute, we have this beautiful formation here. This is perfect. So it's not 100% perfect, but this is one I'd probably bend the rules a little for and say, you know, this is probably broken above the old highs and retested that. I'm probably going to go. I would take this trade. Yeah, that's a nice trade. Okay, so here's a trade that that worked, but wasn't a big winner. Okay, we have an uptrend which is very marginal. We have a downtrend which is rolling over, so that is less than ideal. We have a strong breakout and a pullback perfectly to the 8 EMA. The 60-minute is between the 8 and the 21. This is okay, a little bit too far down. The 15-minute, we have a nice horizontal line that's gone down and recaptured. So yeah, this is an acceptable trade. It's not a perfect trade, probably a B trade, and it worked out, so it was okay. But yeah. Okay, what do we have here? Okay, we have a trade that looks dodgy to me. Can anyone see what's wrong with this trade? Yeah, exactly so. We've got the daily and the weekly being down, and the 60 and the 240 being up. That's not a good trade. Okay, so let's look at this next one. We have daily trend, that's nice. The weekly trend is nice. The 240 has hit this and bounced, which is good. The 60-minute is between these two, which is good. The 15-minute has some nice stop places here. And the 5-minute doesn't really have a clear line, but we have the very strong fake out and bounce. This is a nice trade. So my question for you is, you know, how would your trading change and how would your life change if you were trading something like this or a full system instead of how you trade now? And it's not really about the money. You know, it's about how it would feel to trade a system which is profitable 9 out of every 10 weeks. When I traded this system for the first time, I was actually pulling out money and paying my rent every week from this system, and I was able to pay my bills from trading profits, and I was actually able to start compounding this little account into something that eventually was life-changing. So my question for you now is, do you need help making this a reality? You know, would you like my help in making this so? So would you like to work with me directly and we can talk about implementing this? So knowing the entry rules isn't everything you need. You know, as well as the exit rules, you really need a step-by-step plan for practicing and implementing the system. So you need a monitoring and a record-keeping process to know when you're ready to trade live. And you need to understand that this is going to be a couple of months of work before you're even close to ready for real money. You know, this is a big job. It's not a way to make quick cash. It's the worst get-rich-quick scheme ever. What it is, it's a sustainable trading life that comes with a lot of hard work. So I know it's a bit awkward, but I have something to sell today, which I'm going to show you anyway, whether you want to or not. And let me bring it over. Okay, so what I want to show you is the System Building Masterclass version 2.0, which contains the system and many others. It contains pretty much any sort of system that you would even consider trading. There's a very high performance example of it, and it's over 12 hours of video teaching you how to build and test high expectancy trading systems. So all my production trading system rules are in there. It's easy to follow instructions. It's a truly massive library of trading systems. Now, the System Building Masterclass is really 3 courses. It's my complete library of present and historical trading systems. It's got everything. And it's got my library of systems that are used by other professional traders. And that's not just stuff that I've stolen off the internet. It's usually when I've shown my systems to someone who's an actual professional trader, they've shown me theirs and given their permission. So it's the greatest work ever completed, and I'm serious about that, on the science of designing, prototyping, optimizing, testing, and implementing professional grade trading systems. I plugged all the holes in the Van Tharp stuff. I took all the wishy-washiness about the Sakota stuff. You know, it's exact, it's scientific, it's everything you need. So my personal trading systems, these are all the trading system rules which I use every day. Easy to follow instructions, black and white rules, complete with screenshots, examples, spreadsheet templates, everything that you're going to need to get you running up really quickly. And it's every single system I've traded for the last decade. So what are those systems? The Crazy Ivan FX system, which some of you have seen me doing their SPY videos lately, is that system. Got the failed breakout system we saw today. Got an E-mini daily chart system. Got the 4-hour mechanical system, which is very similar to this, but easier to trade if you found this one too difficult. We've got a Protect R plug-in exit methodology for marginal edges. So you take whatever borderline system you have now, you plug in the Protect R exit methodology, and it tends to make crappy systems into something pretty good. So we have the Thor trend following daily system, which is amazing. We have the Scalpius mean reversion system, which is my favorite system. We have my personal long-term trend following futures system, which has the bulk of my personal wealth in it now, and it's the system I'm most optimistic about going forward. And it's a very easy system to trade. You trade once a week. It's an amazing system. So we have a mechanical stock momentum system, which is amazing, like literally amazing. And we've given you the code for that. It's the first time we've given you the code on Quantopian. It's perfect for further modification or personalization. And we've got deep dive videos on my 3 best ideas for improvement of it. And we've got all my Bitcoin and altcoin systems, which aren't relevant while Bitcoin's in a bear market, but that may change. If that changes, then those altcoin and Bitcoin systems are going to be great again. So it's not just a PDF document, it's detailed written and videoed instructions. We've got spreadsheet templates to get you up and trading faster, reduce mistakes from the get-go. We've got deep dive videos on the conceptual underpinnings behind the systems, which you really need. You need to understand at a deep level. And we've got numerous videos of me executing system trades live, showing you the exact process start to finish. And we've got tips and tricks that you only get after trading a system for a long time. So new for version 2.0, we've got the Scalpius core system. So there's 2 versions. There's a high win rate, 62% win rate version, which is expectancy 0.24, and there's a low win rate version with a higher expectancy. It's for futures, FX, and CFDs. There's an intraday scalping version as well I use 450 tick charts, which works out to be about a 1.5 minute chart. Suitable for automation, and I have automated it. It's 100% rule-based, no discretion. Technically, this is where you want to start. It's not a challenging system to trade. It's a very easy rule set, suitable for beginners. It's for lazy traders. We have the Thor trend following system, which is quite a difficult system to trade, but it's a good system. It's a trend following system which uses the same specificity concept to tweak the win rate of traditional trend following up to 50%. So it's got an expectancy of 0.21 with a 50% win rate, runs off daily bars. Doesn't work intraday. We have the failed breakout intraday FX system, which you've just seen. We've got the mechanical 4-hour system, which is 70% rules-based. It's much more rules-based than the system you saw today. Low drawdowns, similar expectancy, slightly lower win rate, but it requires a lot less time. So I love this system. This is the system I prefer over the failed breakout system. Just works in with my life better. I can place my orders in the morning, go do some training. I don't have to be at the screen. It's perfect. Perfect for regular income generation. So we have my library of professional grade systems, and it's not just a bunch of stuff copied off the internet. The only systems in the library are systems which working professionals use, and it includes institutional grade systems. So we have a volatility breakout system for stocks. It's got an expectancy of 1.0, which is huge, SQN of 2.4. It's averaging 3.8% per week, only works in bull markets. So it works better on the long than the short side. I cut out all short entries. It's got a standard deviation of 3, SQN of 2.4. Yeah, it was built by one of the Van Tharp instructors. Yeah, it's very good. Similar to most volatility breakout systems. So we have a slot-in bear market system. So eventually the current bull market will end. And this is the short system from the highest performing long-short hedge fund in Japan. And what you do is when the bull market's over, you just start trading this. It doesn't take a lot of entries. It takes about 1 trade a month. It's not designed to make you a lot of money. It's designed to just make you a little bit of money and stop you from losing money in a bear market. This is the system that I'm most excited about going forward. I spent a lot of time in Ed's Trading Tribe group. And all of his students, we used to try and reverse engineer his trend following rules. And he'd give you all these sort of weird guru answers. And we all sort of modeled it based on his returns. And when we modeled this rule set, I can't guarantee it's the same, but it mirrors his returns exactly. So almost by definition, it is very similar. So it works off daily charts. You can hold the positions for 6 months or more. Just exited some fantastic long-running short positions in soft commodities. The model has just gone short in all 4 equities futures contracts for the second time since 2009. It's a very long-term system, but when you get market dislocations, it just smashes. So we have the once-a-month core rebalancing system. So this is the system which trades the retirement funds for all the instructors at Van Tharp International. It's good enough that they trade their own money with it. It's a long-only ETF core rebalancing system. You execute once a month. Essentially, you're just trading the strongest ETFs in the strongest sectors. It's completely mechanical, and it's based on very sound peer-reviewed portfolio theory. So we have the mean reversion cookbook, which is excellent. Mean reversion systems for stocks are the low-hanging fruit of system trading. So these are easy to design, backtest, and execute, and especially with a bit of software called AmiBroker, which is cheap, which does portfolio-level backtesting. It's designed for these mean reversion systems. I share a cookbook with every known entry type, exit, algo, universe selection, and you just choose an entry, you choose an exit, you choose a universe, and you backtest. And this is the absolute quickest way to model a high probability system. So they typically have win rates between 65 and 75% with small wins, and these are emotionally very easy to trade. They don't use stops, they just take extremely small position sizes. So an intraday scalping system for stocks on 3-minute charts, and this is an intraday system for expert traders. It's got an extraordinarily high expectancy of 0.3, which is high for something on 3-minute charts, and it takes 10 to 30 trades per day. It's not suitable for compounding an account because you go crazy trying to compound accounts with intraday. Most people I know, the best trader with this trades $400 fixed R values. It's currently traded by hundreds and hundreds of professional traders. Again, it's a Van Tharp super trader system. This is going to require a lot of time to learn, right? But it's a great system. So the third part of the system building masterclass is 12 hours of videos, 70 videos and counting, covering every single aspect of building trading systems. So we teach you how to design entry techniques, classify market type, rapidly prototype things, back testing and forward testing, do outer sample testing. We teach you how to design exit algorithms, which is really difficult, record keeping, conducting reviews, scatter plots. I've got a method I designed of rapid pen and paper back testing without programming. Show you how to narrow down the type of system in the market you should trade. Got a big section on low capital systems for beginner traders and systems for cryptos. So it covers both pure mechanical systems with some discretion and everywhere on that spectrum, FX, futures, ETFs, CFDs, stocks, crypto. You learn every single aspect of building trading systems with a step-by-step, paint-by-numbers approach that anyone can follow. So this is what it looks like. It's a big video library, and blah, 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 some stuff on scatter plots. And my favorite part of the masterclass is these deep dive hour-long videos on the most common trading system types. And if you're doing trend following, mean reversion, volatility breakout, momentum, or price pattern systems, you're going to want to see this, because the problems that you're going to run into are the same problems that other people have run into before. You can just save yourself a heap of time. So there's a heap of new stuff which I've added for version 2.0, a couple of bonuses are going to help you get faster results. If you want to learn this privately from me, I charge $10,000 USD to do my intensive mentorship course. If you want to do it, check my daily emails. There's an application form that comes out. The next intake for that starts on December 1st. And this is a drastically more detailed and involved course than Van's Super Trader course, which only discovers discretionary systems. It doesn't cover pure mechanical systems at all, because Van doesn't believe in it. So there's cheaper cookie cutter courses which cover only one aspect of system building. For example, if you want to design mean reversion stock systems, Cesar Alvarez has a great but expensive course, which I've done. It's very good. If you want to design discretionary systems, Van Tharp's course is great. It's $60K. If you just want mean reversion FX systems, Ernest Chan, who's a friend of mine, has a great course for programmers. It's going to be better than mine for this. If that's all you want to do, you should buy his course, not mine. So if you happen to buy and like the Price Action Masterclass, this course has over 10 times the amount of content, and it expands on that material, showing you how to build high probability trading systems from the principles you already know. So to learn this by trial and error, it's going to cost you a lot of money, and it's going to take you a long time. That's even if you don't blow up your account along the way like I did a few times. And there's a huge opportunity cost in investing in garbage courses that, a lot of these courses, they just get you to be just past beginner level. And there's a huge probability that you get ripped off by one of these shady get-rich-quick trading gurus with the Lamborghini and the pretend millions. And I'm not that guy, and I'm not promising you. This is not a very good get-rich-quick scheme. It's a job that pays about as much as, what a professional job pays anyway. You're going to earn, most home traders earn about the same as an average engineer, an average lawyer, an average accountant, stuff like that. It's a real job. It's a real business. It's not a get-rich-quick scheme. I just don't want to pretend that it is. So there's a huge risk of falling for these prediction gurus, like I fell for these assholes at Elliott Wave, telling you can predict the market right out years in advance. This is going to happen, and then that's going to happen, and then we're going to do this, we're going to do that. It's just crap. It doesn't work. So who is this for? This is for someone looking for a set of system rules they can learn and practice right away to get to professional level as soon as possible. This is for someone who already trades with a method they've never been capable of testing. So if you're trading with a system but you never tested it, you should, for your own peace of mind, test it. It's for someone who wants to optimize and improve an existing system, and it's for someone who is designing a trading system but stuck for ideas. If you want to see 20 other different trading systems, and then you'll have some ideas. So it's for someone who has an idea for a trading system but needs a step-by-step process for turning that dream into reality. So who is it not for? Not for traders who just want to get better at chart reading. The Price Action Masterclass is for that. It's cheap. It's not for traders who want to predict the markets. It's not for traders who want to be right all the time. And it's not for people who think you can buy the ultimate super system. All systems have pros and cons, strengths and weaknesses, and no system will work unless we're in a favorable market time. So I hope you can see this is not for everyone, but if it's for you, it's going to be the best money you've ever invested. I base my whole trading business around this process. I've taught other people how to do it too. Now they have their own successful trading business. Now, if all this did was let you make the jump from being a hobby trader to I make my living, would it be worth it? So if all this did was stop you from the disaster that happens when you try and learn to trade doing the hardest type of trading with no system, would that be worth it? So if all this did was allow you to compound your little small hobby account into something that you can make a living off, would that be worth it? So I got some new stuff in the version 2.0. I've got an E-mini daily system, which I traded in 2011. It's the first triple-digit return I had year trading fully systematically. It's based around the market hours edge applied with the crazy Ivan patterns. The best inclusion for the new system is the standard momentum system version 2.0. We've taken logical and very small tweaks to our standard momentum model, which was based on Klenov's model, and produced something really special. It's 2006% return in the last 15 years. We have the NR7 daily chart stock trading system. It's an excellent and consistent edge, simple execution of daily charts, and we have an expert quant trader called Karu Bakaran who's traded this for years, and he ran it down for us in exhaustive detail. So this is the equity curve of the standard momentum system. Very nice. 2006% in 15 years. You get the actual code for it. We've got a 15-minute FX European pre-market system. So this is my own system for trading from the hour before European pre-market open. Trades for 2 hours per day. It's 100% mechanical. It's challenging to execute, but there's black and white objective rules. Suitable for automation, but it would be quite difficult to automate. We've got my 3 best guesses for long-term systems for capital appreciation. So these are the systems I think will compound quickly in the future. So if you join today, I'll give you the practical trading psychology video course, which is my exact pre-market routine to get into a flow state for trading. It talks about dealing with drawdowns and unpleasant feelings. And there's many books that talk about trading psychology problems. This one talks about practical solutions. So free with your membership is going to be 4 by 15-minute mini consults with me over Skype. So you're going to encounter challenges and hurdles and problems. And instead of just worrying about, should I do this or should I go that? How long do I backtest? Which market should I backtest? What should I do next? Just jump on Skype with me for 15 minutes. I'll save you a week worth of wasted effort. So this is enormously valuable. You only get it if you buy it right now. And you just choose something on my automated calendar anytime you need help, and I'm always available. So will this work for you? So if you go through the material, if you can't build a trading system that makes money, then here's my guarantee. So I'm going to spend up to 3 hours of my personal time with you trying to set you straight, help you towards the goal. If after that you still cannot build and execute a positive expectancy trading system, if you've gone through the material, you can't do it, I'll refund you in full. No questions asked. So I'm sure you would agree that I could easily charge thousands of dollars for this course. And so every time we add new content, usually I raise the price. But for you, I'm just going to leave the price unchanged. I think it's fair. So lifetime access is $5.99. It's the cheapest it will ever be. And you get the benefit of unlimited future upgrades. Also, you get to participate in my live events on backtesting without programming skill. I'll do another one this month, so you get that as well. So what I'd like you to do is to go to scottphillipstrading.com/system-building, and I'd like you to buy it right now. I'll tell you what, I'll do you a deal. There's an upsell on there that we usually charge $499 to. Anyone who buys it today, I'll throw in the 14 professional systems upsell for free. So don't click on the I want the upsell, and I'll give you I'll give you the $499 bonus for free if you buy it today. So if this finally lets you get some financial reward for the thousands of hours you've already spent, that'd be worth it. So if this cut your trading day down to 20 minutes a day and stop your screen watching, would that work? If this would just let you stop using other people's setups and systems and let you settle down with one system, would that be worth it? So before we go, I'd like you to imagine how life is going to change a year from now after building your own trading system. So you're going to have a full year of total professional trading under your belt. You won't care about what the market does tomorrow. Your total focus is going to be on trading correctly, not anything else. You're going to be calmer, you're going to be happier, you're going to be doing a fraction of the work, and you're going to be making more money. And so this life is sustainable, and it's for you, and you should buy it now. It's at scottphillipstrading.com/system building. So thank you very much for your time today. This is a fantastic course, and you should buy it because I wish it was available for me. Okay, guys, any questions on the system? Okay, I'm just going to go to the bathroom. When I come back, I'll answer questions, and then we'll wrap it all up, okay? Buy that system building course. I'll throw in the upsell. All right, no questions. All right, let's wrap it up then.